Dear Heavenly Father, we thank you for this day and this city in which we live. Guide us this afternoon as we make our decisions. In Christ's name, amen.
Amen.
This is a September 29, 2020 special call meeting of Newnan City Council. Our one item of business today is the consideration of the insurance program and presentation by MSI Benefits Group and city staff. Mr. Phillips.
Yeah, Mr. Mayor,
Take
Council.
us through this.
Absolutely, great to see you today, great to be back. Sorry I missed the last council meeting, but I know it went well and capable hands of Haskell. As you know, about a year ago, we started a conversation discussing the future direction of our healthcare program. We discussed it at retreats. We actually hired an independent third-party actuarial to do some analysis, and then obviously upon direction of this body, we sought services of a brokerage firm, which we went through an exhaustive process and selected MSI Benefits to represent the City of Newnan in this brokerage role as we go forward examining our roles for insurance. Today we're going to have a presentation with John Leggett and Matt Tidwell. We've got to know John and Matt well. Knew them before, so we've gotten to know them and have really appreciated getting to know their professional side and the abilities they bring to our team. I think they're going to have some options for you today to consider that are very advantageous for us at the city. They represent several cities and counties throughout the state of Georgia, so very familiar with the process today of how elected officials work. So without further ado, I don't know whether John or Matt will take the lead.
We're both on a tag team.
Give it to them, let them introduce themselves and go forward.
Sure, thanks.
Hey, good afternoon. I'm John Leggett, and very happy to be here. And thank you very much for having the confidence and hiring MSI and working with us. And we look forward to implementing this and meeting all the employees. Matt?
Oh, sure. I'm Matt Bidwell with MSI. And again, we want to thank you all for having us here, and we look forward to working with you all in the future. Thank you.
Thank you.
So we started the process soon after the city made the decision to go with us, and we began the process of gathering data, and that was the way we had to begin, was going through all of the different data the city has, the data the carriers have, and one of the challenges was we found with gathering some data was some of the information we needed from GMA. We went to GMA. We were able to get data, but the accuracy of and the amount of the data that we were able to get was not what we're used to getting. So one of the reasons why we're looking, what we're going to be recommending here, and we're going to talk about, is the different type of reporting we're going to be able to do. But with that being said, this is the first page here is the actual renewal. As you know, the city's with GMA. It's a trust set up for cities, an individual or self-insured trust that GMA manages for cities in the state of Georgia, administered with Blue Cross on the medical side and Aetna on the pharmacy piece. As you see, if you look at the PowerPoint, we have 3 plans currently offered now. We've got a base, POS, middle, HMO 80, and high, HMO 90. If you're looking at the membership there, you can see the employee plus one, employee plus family. You got 25 on the base plan, 84 employees enrolled in the middle, and the majority of the folks enrolled on the high plan at 151. Well, you can see the current premiums, what they're going to, so it's about 16.64 across the board. And if you come down below them, you'll see the employee deductions. This is what employees pay now. So for this illustration, we kept the employee deductions the same, so no change to employee deductions. It's not on this sheet here, on this chart, but you'll see it in the coming pages. But the employee deductions total about $556,000 annually. And you'll also see that the billed premium right now to the city through GMA is about $4.3 million, going to just over $5 million. And so what we're showing here on this page is the annual net. So right now the city's annual net cost of GMA is just under 3.8, and with the increase and keeping the employee deductions the same, it would have gone up almost 19% to about 4.5, or about $700,000. Now, as I said, we've done a lot of work in looking at our different options out there and looking at self-insured options. We had several TPAs provide options. We had several that we reviewed, and after it was all said and done, we had staff, management, and us had several meetings, and ultimately we came to the recommendation of Cigna as the preferred and recommended third-party administrator, network, and pharmacy manager for the city. Looking at this sheet here, as you know, right now you pay billed premiums. You're fully insured with GMA, so it's going to change a little bit under a self-insured contract if you adopt this. Cigna will be the administrator. They will be the ones paying the claims for the members, and their administrative cost to do that is about $130,000 annually. And as I think you're probably somewhat aware now, going self-insured, the city will actually be, the claim payments will be pulled from the city's accounts. Cigna's going to administer that, and they're going to pay all claims up to a specific deductible amount, of which point the reinsurance, the stop-loss insurance would kick in. And under this option that we're recommending, we're looking at a $100,000 deductible there, so anything above that would be paid under the Cigna reinsurance. And the premium for that annually is about $770,000. So those are your fixed costs. Those are, no matter what we do, that's what the city's going to be paying over the next year, and that's about $901,000. So in looking at the plan design and trying to evaluate the claims, the makeup, the pharmacy, everything, that would be the next section is claims, the network. The annual expected claim total coming in is just under $4 million. And so if you take that number, the $4 million, of what they're anticipating for 2021, and you add that into the stop loss and the admin, which is the fixed cost, we're looking at just under $4.9 million.
Mr. Leggett, could I ask questions as we go?
Yes, sir. Yes, I'm sorry, go right ahead.
So
And
when
Matt?
you look at the $100,000 stop loss deductible, is that standard, or did we compare what 250 might be, or not higher?
Yeah, that's a good question. We evaluated 100, 150, and then 200,000.
Okay,
And based on where the premium and the claim liability was, we felt that the first out the gate was 100,000. That is a standard deductible that you'll see under a self-insured contract.
right. So we're not locked into this after the first year. We can
No.
change our deductible in year
You
2
can.
or 3?
You sure can.
Based on claim
Correct. Right.
history? Okay,
Mhm.
The other reason we chose 100,000, if I may chime in,
sure.
is that the higher you go on your deductible, the greater fluctuation you get on your claims.
Right,
So we wanted to make that claim number we put out there as close to what it's going to be.
right,
And so what you'll find out in future years is you get a little bit more comfortable. See, even with a $100,000 deductible, you're probably going to have 3 or 4, maybe 5 claims this year. It's hard to believe that you have that many individuals who will hit that kind of claim, but you will. And so as you get a little bit more comfortable with it, you'll see us wanting to move that deductible up. And as we move the deductible up, that $770,000 number comes down.
right, I know.
And so that's
the reason I'm
this
trying to
is-
reduce that number.
And so what we felt was a good start, this is a good way to kind of introduce you to how it works.
Right.
And I think as you'll start to get more into this and get comfortable, you'll start to reduce your fixed cost and be more comfortable with the liability.
Okay, do you manage a city the size and the class of employees that is similar to Newnan, that we could skip, where you could use your expertise and skip that step?
Well, you could, but again, we manage a lot of cities about your size and government your size.
Right,
And we showed the numbers. See, if I sat there and we said, well, we're gonna take it to 200,000, your fixed cost may come down 200,000, but your claim liability might increase 200,000. In fact, it's almost a 1-to-1 ratio on how that changes. But we were just trying to keep the fluctuation down the
Okay.
first year.
all right,
That was
thank you.
really the intent behind it.
I appreciate it, thank you.
Mr. Mayor, one thing that, and I know that John alluded to it initially, the fact that we don't have really good data this year
Right.
is another reason we're trying to not take on more risk. As we get into this and we get more reporting, more details, we'll be able to be in a position as we stand here next year to have more confidence on where to move. We really had very limited data.
Our current provider just would not provide you with that data?
Well, through the GMA.
You can be blunt.
Sure, yeah, well, The average size client in GMA pulls under 100.
Right.
And so they almost manage that pool like you're that same
I see,
size.
I see.
And so releasing certain data, they kind of protect it for that reason, due to HIPAA, I think is the main reason.
Okay.
The other main thing that happens is you have your medical claims with Anthem, Blue Cross, and our pharmacy is with Aetna, and we could never get a file that combined the two together. And then, unfortunately, if you know somebody who gets real sick, medicine's usually a big part of it, and we could never pull those two numbers together to know what our biggest claims were.
Okay.
So, and again, I'm not putting any fault back on
No,
GMA, it's just how they're set up.
No. Thank you, I appreciate it.
Oops. So, looking at the claim section, you've got the annual expected claim liability coming in just below 4, adding that into the fixed cost is just under 4.9. If you come down into the debit section, you'll see pharmacy rebates. So one of the things that's built into the contract is that the city's going to be guaranteed a minimum of $192,000 in pharmacy rebates, even if it were only $160,000. Cigna's guaranteed $192,000, so we factor that in as a debit, and that's money that comes back to the city. And then they've also, to sweeten their proposal, they waive partial administrative costs starting off. So they're going to waive $65,000 of the administrative costs during the first month that we're implementing the plan. So it'll be for January 2021. And then, of course, the employee deductions are about 556 is the number, as I mentioned earlier. Take all that in, and that's 813,000. If you subtract that from the expected fixed and claim total, then we're looking at just over $4 million, which is about an increase of about 285,000, or just below 8% compared to what we were looking at on the previous page with GMA.
Is the administrative waiver, is that standard? Is that pretty much the norm, that 65,000?
It is in a competitive situation when they know they're competing, and we're out there, the city was out to market, and they're trying to
Okay.
get you to, select them as the vendor.
Yes, sir.
Yeah.
Thank you.
So that's just for 1 month.
So it's the first month of 2021, and then I've got a note there. It's 46,000 for year 2, and then 31,000 for year 3. So they waive that part. So that part of that 901,000, that's part of that they're going to waive.
Okay.
So realistically, if you're looking at the stop loss at 770,000, you can subtract 65,000 out of that, wherever you want to take it away. But that's where it would come from. Okay. Also, one biggie is or a couple things. They've thrown in a $20,000 wellness fund, and this is a common practice as well. So they basically say we're going to give the city $20,000 to spend towards wellness for 2021, and they generally will renew that. So that we'll have that money there to be used towards wellness and health and wellness. And then the other thing they did is they've given us a no laser guarantee. And I know that doesn't mean much to you right now, but you'll understand it next year. So when we say that there's a $100,000 stop loss deductible, and anything above that is paid by the reinsurance. If someone gets sick and they have some claims ongoing, they're on dialysis, and we know they're going to spend $200,000, sometimes you will see a third party come in and say, well, everyone has a $100,000 deductible except for this person. His is $200,000, or hers is $200,000, and so they laser that person out, and that just means that you have to pay the claims up to $200,000, and then the reinsurance would kick in. But they've given us a no laser guarantee for 2022, which is a big deal. It's generally, they threw that in as well at the last minute when we were back and forth negotiating them and another TPA. So I thought that was a good thing we wanted to mention. Any questions at all before I leave this page? Yes, sir.
One more question.
Yes,
the
sir.
20,000 wellness fund, does GMA do that, or how does that compare?
GMA does have a small wellness fund. It's about 7,000 or 8,000.
Okay,
But
okay,
there's a lot of, you have to jump through a lot of.
You have to apply for it.
right,
Yeah.
There's a lot
Yeah.
of.
okay, thank you.
Before we go on,
Yes, sir.
if we could go back to the stop loss carrier, if a city was able, would it be of any benefit to create like a $200,000 pool so that you could you could increase or make a savings there of some way? Or?
I'm not sure.
If I could help with that,
Yeah.
yeah. Typically what happens with our groups, when they move to a self-funding arrangement, they're gonna put a budget number out there, and generally, we see them come in under it, and then it's a matter of what they do with that money, and that might be a question better for,
Yes, we're gonna create, you'll see it in the budget, proposal this year, if you decide to go forward with a self-insurance platform. We're gonna create a internal service fund, which is gonna be a standalone health fund. We're gonna budget, allocate money to that particular fund. That's where all the credits and debits will go into that fund. And at the end of the year, hopefully, we're to the good.
There'll be some
We got
left.
fund balance in there, and we'll continue to hopefully build a fund balance, rainy day fund, in the actual health fund.
Okay.
Then you can raise your deductible and not worry about the difference.
Yes, and we can tweak all of these things from year to year.
Correct.
That's the key thing about in the self-insured platform. And he'll talk a little bit about plan design features, and that's one thing that we were really limited under the previous healthcare, is we didn't have a lot of flexibility to tweak some of the plan design features. So really, this is becoming our health insurance platform tailored for our unique needs, not necessarily a platform that's just tailored for the general population.
Right.
Thank you.
And one of the things when we like Cigna is, Cigna we felt was the easiest model to move you all to, because they are, they will be the administrator, they're going to be the pharmacy, they're going to be the network. There are models where you could hire ABC administrator and use the Cigna network, and then have XYZ stop loss carrier and another pharmacy manager. And we looked at that model, but based on the numbers and just the fact that we know we're leaving GMA and we wanted what we felt was the best for the city, we felt Cigna offered that. One of the things that they do is they have what they call a local plus network, and so that is their Piedmont network. Cigna insures Piedmont, and they have an exclusive deal with them, and they fill, or not, they don't fill. When claims are ran through the Piedmont network, they're on average 8% better than their regular national OAP network. So we're going to have that network, and we'll talk about it, along with their 2 OAP networks as well.
Okay, for just a second, let's go back to the no laser guarantee and
Okay.
compare that to what we call pre-existing conditions. How does the coming, I don't know when it's gonna happen, but the pre-existing conditions law and the healthcare insurance in the industry, when's that gonna take this no laser guarantee and replace it?
Well, that's not really the pre-existing clause.
I understand.
It's basically saying we aren't going to cover that person under the stop loss contract as it is right now. The city's going to have to pay an additional amount above the deductible, but everything's going to be covered. Pre-X isn't going to be excluded. Do you want to add?
sure. We're kind of mixing a little bit of apples and oranges, so the pre-existing conditions are always covered under the plan. That's federal law, and the city will be doing the same thing. So you hire a new employee is on the GMA coverage, they change over, there's never a pre-existing condition ever. So what we were talking about, when we talk about a laser condition, it has to do when we shop your stop loss insurance. So when we get your renewal next year from Cigna, they're guaranteeing us that if, remember this, they're selling us a $100,000 deductible on somebody so that if they have claims over that, they're going to pay it. And the thing that insurance companies like is they like to insure risk. They don't like to pay claims. They want to insure risk. So if they see an individual next October and they see the person was diagnosed with a certain, I'm going to pick on, just say colon cancer. A colon cancer claim typically runs around $300,000 to $400,000 in claims. And when an insurance company sees that and they're selling me a $100,000 deductible and they're only charging me XYZ premium, real quickly in their head they go, wait a minute, this is not a good deal for us. And so they will sit there and say, Matt, we're going to give you a 5% increase on your stop loss, but the gentleman over here who got diagnosed that we know is going to have a $400,000 claim, we're going to raise his deductible up to $400,000 because we're selling risk, we're not paying claims. And that's honestly how the discussion goes. So what they've given us in this guarantee is that if when we go to renew next year, they will not single out any one individual at the city and put a higher stop-loss reimbursement on it. That's kind of a hard concept to understand,
No, I understand.
but it's basically, they've guaranteed not to put a higher deductible on any one individual when we renew next year.
No, I understand exactly what you're doing.
But they're not promising that for
And I will say, if you
But
were,
the rate may go up.
Right.
well, I was gonna say, under a fully insured contract, they do the same thing. They just give you a 20-30% increase like we were looking at based on.
And
Okay.
again, whether it's dealing with Cigna on a fully insured contract or Blue Cross or anyone, all the insurance companies, when they give you those premiums that they're gonna charge you for next year, they look at your population and they single out the folks that they see having big claims, and they add that into the insurance renewal. And then they all do it. And so it's one way or the other, you know, I hate to say it this way, but your claims are your claims, and this here just makes it a lot more transparent.
I understand.
As far as the plan design, on the left, there's the current 2020 plans through GMA and the three options, and the proposed plans on the right. Mr. Phillips said, you know, we do have, one thing now, we'll have the freedom to tweak benefits as we like. And so we evaluated them, and what you're gonna notice is, does this work? Yep. You're gonna notice that these two plans, the local plus, and what we're gonna name the local plus and the base, OAP, are gonna have identical benefits in network. Same deductible, co-insurance, so $500 deductible, co-insurance 80%, doctor co-pays, all the way down to the drugs. One difference is going to be the out-of-network coverage. So as of right now, the city has the POS plan and then 2 HMOs, and neither HMO has out-of-network coverage. It's only, unless it's emergency care. So this will be the local base plan, and these two plans will you know, have the exact same benefits in network. It's just going to be a matter of, do I use Piedmont doctors only, or do I want to be able to go outside that? And employees will be able to make that choice, and they're going to make that choice based on the cost. So if I'm a single guy, 24 years old, starting here in the police department, do I want to pay nothing or $12? Well, I don't ever go to the doctor. My doctor, I did go as a Piedmont doctor. I'll take the free plan. And I think a lot of people will choose that way. But we didn't tweak the benefits too much. What you'll notice is currently the base plan POS is $500, so we left that alone. There's no change there. Co-insurance is the same. The actual doctor co-pays is going to be lower, $25 and $35. The one thing that we're seeing on average now is that ER co-pays are up there in the $300 to $500 range, and you guys were still at $100, so we did increase that on these two plans. The ER copay on the buy-up will be a little bit lower. We want to try to get people to use urgent care or their own doctor or, you know, other avenues because our ER care is so expensive. And then the out-of-pocket, we really didn't change the out-of-pocket compared to the POS. It's $2,500. It will be 3 times per family as the deductible. The deductible is. What that means is I have a $500 deductible. I got a wife and 3 kids. My wife and I both hit the 500. Only my 3 kids have to combine to hit 500, and it'll be the same way on the out-of-pocket. It'll be $2,500, including the deductible per individual, not to exceed 3 times for the family. Prescription drugs, you'll notice we did the tier 3 drugs are now going to be $75 across the board, so it'll be the same drug card on every single plan. And then again, these 2 plans over to the right will have out-of-network coverage. Any questions on the plan design?
I want to make a couple of comments there. One thing that we tried to do going into this plan design features, and we met on this several times, is we try to keep a good plan design for our employees. That was something that was very important to me. Knowing that it was going to be very hard to keep exactly the HMO 90 with 0 deductible and a $1,000 out-of-pocket max. But still, gentlemen, if you were to say, compared to the market, where do these 3 plans that we're proposing lie? Are they still very strong gold level plans, or where do they fall?
Yeah, they're up. I think they all measured above 85 to 95 in that range percentage.
What that means is that they're all,
Gold,
go by the
high gold.
Affordable Care Act, they call them bronze, silver, gold. Well, some of these are close to platinum.
Yeah.
they're high gold plans, so they're still rated very highly.
Yeah, the deductibles, and you guys probably know this, but deductibles in today's world just aren't that low. So there's still very, very great plans offered to the employees. And this projection shows no change in deductions. So employees will not really, they'll see some improvements, you know, with doctor co-pays. But realistically, the plans are very similar and the cost isn't changing for the employees.
But just another heads up, as we've been, this may be something we have to address in years 2, 3, or 4 at some point in time. We may have to end up introducing at some point in time some other type of high deductible savings plan option. But for year one, again, for the change from fully insured to self-insured, we wanted to take a conservative route and something that the employees were very familiar with, so there's not a lot of changes in their benefit coverage.
And one other thing I want to kind of get your mind thinking about, it used to be, you know, I go in there and my insurance pays for it, but we're now the insurance and we're paying for it. And we put up there the Local Plus Network, and I want to talk a little bit about that, because this is what makes stuff so crazy. I'm going to go back to my wife at Christmas when we go to, she takes me shopping to Macy's, and she walks in there and you've got 10 different coupons in her purse on what she's going to pay for a pair of pants for me. I just think it's absolutely crazy why they have all these different coupons. Well, when you start looking at Piedmont, which is a fairly significant provider around here, any employee who enrolls in the Local Plus, and they use that, we're getting almost an additional 8% reduction in the claims that are being charged to the city. So now you take that and say, gee, we're going to have $4 million in claims. I mean, my math isn't real good, but that's a little bit over $350,000 if all those claims run through Piedmont. And so the reason that we're introducing the local network is because when our members do use it, we, the city, are receiving an 8% reduction on what that charge is. Because what Piedmont is doing is they're sitting there saying, you know what, we're going to give you an incentive to come here so you don't go to Emory. We don't want to incentivize you going to Wellstar. And so it's almost like, you know, we're giving the employee the option. They don't pay anything else for the insurance, and we're getting the break on it, and the fact that we're not paying out as much in the claim.
All right. I think this is the last slide on the medical. This is kind of a good comparison here. Fully insured versus self-funded. Currently, the total fixed cost, which is premium, paid to GMA is about 4.3. With the increase, it's going over 5. There are no claims would be paid by the city, right? Because the city's fully insured, so GMA's paying those. We factor in the deductions, so employees are paying $556,000 a year. So come down to no RX rebates or waivers. So the net spend would just be under 3.8, currently going to just under 4.5, about a $712,000 increase, or just under 19%. If you come to the right, our fixed cost under Cigna is going to be $901,000. We know that to be accurate based on today's enrollment. The anticipated claims are about $4 million. You factor in the $556,000 in employee deductions and the $257,000 in the RX rebates and administrative waivers, another $257,000. That gets us down to that just over $4 million. So the difference is about $285,000 compared to $712,000. Or, like I said, just below 8%. If you come down below, the expected claim liability is about 80, is that 80% number. That's where they anticipate the claims to run. There's going to be a lag, and we anticipate the first year the number's not going to, for its actual claim dollars paid in 2021, we expect the number to be lower than that because of that lag time. But what the chart below shows is, let's just say if we run at 65%, then the actual spend by the city is going to be about $586,000 below what was budgeted for this current plan year. So you can get an idea looking at that chart below based on how claims actually run. And like kind of what Matt was talking about, if we get several folks to sign up for the Local Plus and the better discount, you know, we could see it's a matter of, you know, we know no matter what, if we stay with GMA, it's going to that. We anticipate this, but it could be better than that. It could be an actual decrease for the year. Any questions on this slide? All right, so wrapping it up here, we reviewed every benefit. Of course, we spent the majority of our time on the medical just like we will for today. The dental is currently with, through GMA and it's Delta Dental. We went to market there, and ultimately Cigna gave us the best proposal. This is actually a better plan. They're 90th percentile compared to the maximum allowable charge out of network, but ultimately they were just slightly above where Delta came in, and we're recommending moving that to Cigna as well. Very similar coverages and very similar costs. Cigna as well on the vision, they ultimately matched the benefits, and we're about 20% below the current IMED coverage. And so we think that keeping the medical, dental, and vision all with one carrier, one saving solutions, is the route to go. It's one ID card, one platform to go online. And then we'll also talk about the flexible spending account as well, that ties all these together. But the vision, we think should be moved, recommended that to go with Cigna as well. Then we looked at the life, just the basic and voluntary life insurance. Currently, the basic life is with GMA through, I think, Anthem, and then Mutual of Omaha on the voluntary life. This is slide 8. Right now, the city's paying about $64,000 annually for the life insurance, so $50,000 on every single full-time eligible employee. Same amount quoted with Met, same reduction schedule. They came in at $43,000, or about 31% below. So there's about a $1,000 savings on the basic life. Met also gave us a better rate on the voluntary life, so now we're going to tie those two together. The basic and the voluntary life that employees pay for will be tied together. So the recommended option there is Met. And on the disability, MetLife came in with the best numbers. So currently those are the short-term disability and long-term is both with Mutual of Omaha. And Met matched Mutual of Omaha, so there's no change there. They did give us a better rate on the long term, so about 14.5% below. And the other thing they did is anybody that wants the coverage can sign up for it, no questions asked. Right now, if we kept it with Mutual of Omaha and someone had been denied in the past or had a condition, a pre-existing condition, they wouldn't be able to sign up. So they've given us an open enrollment on that, and that is voluntary. MetLife also gave us a better plan and rate on the accident coverage. And so the voluntary accident coverage, we're recommending moving that to MetLife. We've got the critical illness. This would actually replace the cancer insurance that's with Colonial. It's recommended to move that critical illness to Met. This is different than cancer. It pays if someone were to have this coverage and be diagnosed with cancer, it pays a lump sum benefit for that. Typically equals about what they would get out of their cancer policy. But in addition to that, it covers heart attack, stroke, major organ transplant. There's just other benefits that are covered under it. We feel it's a better plan, and more carriers are only offering these, and it's at a good rate and guaranteed. So we recommend the critical illness as well going with Met. The other thing is right now there's only 17 employees that are enrolled in the Legal Shield, but while we're at it, might as well move that to MetLife as well. MetLife and Hyatt Legal have a great plan and trying to eliminate some carriers that the city's dealing with, we felt would be the route to go. The way I describe this is the legal plan is like an HMO for attorneys, and this is more like a PPO where there actually could be some local attorneys that are under this legal plan. So we recommend that. And, on the last page, I've got a summary of all the different plans, the different carriers that are currently in place, how many are enrolled, and then the recommended carrier for each benefit. The one thing you'll notice if you go down third from the bottom is the universal life. There's only 27 employees enrolled in that, and so we're recommending taking that off the menu. Those employees will be able to keep it, but everyone else has been offered the coverage, and it just hasn't been a lot of interest. We've had discussions on that on the legal. I'll leave that up to you guys. But the other thing was the flexible spending account, moving that to Cigna. And one thing that does, we did get Cigna to cover the cost on that. But one thing it does is when someone uses their flex spending account, if they're covered in the medical, dental, or vision, if Cigna is administering the flex, then they're not going to be asking for verification as often as they do now. And so it's, from a user standpoint, it's going to be much better for the employees. So still get the same debit card and everything. So I'll hush now and see if you guys have anything else to say.
Questions? Good job. Thank you.
Thank you.
Thank you.
Appreciate that.
I do
I
have
didn't
a
mean to
question.
say that, to cut anybody off.
No, I do have a question. When we first had a, kind of a primer on this process, you talked about the fact that one of the things that self-insured are able to do is skip the state requirements for coverage of certain things. Are there any of the state requirements that are specifically not going to be covered in this?
No. So basically what happens is that Cigna is going to set up your plan to cover any state mandates. But you're right, if you're self-insured, you have the ability to exclude it. But that would typically be, hey, we don't want to cover this, instead of, reviewing everything. So Cigna is going to administer that. They're going to make sure it's ACA compliant. They're going to make sure it meets all state guidelines. Even though you're self-insured, you don't have to implement everything. It will, unless you tell us otherwise.
Okay. And then the only other question I had was about the employees, the seamless transition. We're not in a position where, a significant number of our folks are gonna have to change providers. Are we?
Well, actually, the provider network match, when we do a comparison between, don't forget the local plus, let's talk about the OAP. The OAP is going to be about a 98, 99% match to the Anthem network. So basically, there's only 4 or 5 big carriers in the state of Georgia, and if you're a provider, you're pretty much going to want to be on their network. So there could be 1 or 2 that does experience that. And in those cases, we can reach out to the provider. We have helped providers get appointed if for some reason they're not. But we don't anticipate the network being the big disruption there.
Okay. That's all I got.
Anyone else? Okay, next step.
Obviously, we're getting very close to our open enrollment dates.
Yep.
So what we would need from council, if you're comfortable, is a couple things. Obviously, the primary motion to proceed as recommended, but I think I'd also like to get on the record, I'd like to get authorization for the mayor to sign all of the potential contracts and documents that come from the actual providers. And also get authorization that we need to notify GMA that we will be leaving the program. We have to give them, per our plan documents, notice in writing. So we'll need authorization to do that, and I need to look at the plan documents to see exactly how we need to word that notice. But I think that's kind of the 3 potential action items that I'm looking for. General authorization to proceed, authorization to sign, and send GMA a notice that we'll be leaving the life and health pool.
So moved.
Make a motion that we do those things.
Do you want to combine those? I'd
Make it separate.
Maybe prefer to see them in 3 separate
Okay.
motions.
3 separate.
Okay. So who's got the first authorization to
I make a
proceed?
motion that we authorize us to use this.
I'll second that.
Motion and a second. Any further discussion or questions about the proposal itself? Okay, all those in favor? Opposed? Motion carried. Now, an authorization for the mayor to sign all
So
documents
moved.
related to the change.
Second.
Motion and second. Any discussion on that? All those in favor? Opposed? Motion carried. And then a motion to authorize staff to inform GMA of our decision to move.
So moved.
Motion second, any discussion on that? All those in favor? Opposed? Motion carried, okay. Anything else for the good of the order? Mr. Phillips, Mr. Sears, anyone? I'll entertain a motion, we adjourn.
So moved.
Motion and a second, we adjourn. All those in favor indicate by saying aye.
Aye.
Opposed, like sign.